Good morning, traders. Welcome to the Phoenix Blue morning update for Wednesday, the 23rd of March. Today we have our monthly boot camp in London starting at 7 o'clock, so I'll be keeping this fairly brief. Main focus for today will be the markets shaking off the Brussels terror attacks, which had an effect yesterday. Okay, just to start off with the news then. Yesterday we had some negative CPI news on the pound and also some negative German economic sentiment news. Going into today, not a huge amount. 2:30 we've got the crude oil inventories from the US, and 9:45 this evening we've got the trade balance on the Kiwi. Starting off in the Asian markets, the dollar-yuan exchange rate, and we're still above those 2015 lows after a bearish day yesterday. We've had an inside bullish day so far overnight. I say so far because these screens were downloaded a little bit earlier than normal. Over on the Shanghai Composite, the composite of the Chinese stock exchanges. A couple of days ago, we knew we had a new high. We still now had two inside bars inside that new high. We'll be looking to see whether this market now moves off in a bullish direction. Nikkei 225, well, again within the range, back within the range of the last week, above the 2015 lows. Not a great deal to report there. The dollar index yesterday, we had a bullish day yesterday, and the start today's been bullish following the attacks in Brussels yesterday morning. On the euro, naturally, we've had a bearish day being the inverse of the dollar. Again, this morning, we're bearish again. We didn't have an opportunity to trade the level overnight because the bar didn't close below. Similarly, we were looking to trade the yen above the lower level at 112.25. We didn't get a significant close above on yesterday, so we stood off that trade on that basis. On the dollar Swissy, the dollar Swiss franc, we've got a break above a level here now. We're now looking for a retracement to that level, a retest of the level to go for a T2 target around this level here. So far today or overnight, we've been pretty bullish in this market, so whether it will pull back today or not, I don't know. But since I downloaded this slide, I've placed an order at that level. Over on the pound, well, the pound took a real pasting yesterday, basically with all the Brexit news. On top of that, the Brussels attack and talk of the risks of remaining in versus leaving the the EU, and how that might affect security in this country, etc., etc. We were earlier in the week bullish this market short term back up to the downward trend line that you can see. However, with recent events and recent price action, we're now back to our bearish scenario, and as you can see here, we placed an order this morning at a level here, looking for a retest back to there to go to lows back down to the most recent February lows. Over on the Kiwi, we are short this trade already, and we'll be looking for opportunities for it to pull back to the latest level about around 6,750 in order to take it lower. There's quite a few levels on that chart. It's giving us a lot of or a number of nice levels that we'll be looking to add in as we go down to build a substantial position. We are bearish this market following the rate reduction or the recent rate reduction from the Bank of New Zealand. Over on gold, we are looking for a pullback to the confluence of the trend line and a level around 190. Yesterday we had an immediate reaction of risk off to the Brussels attacks, but that's been overcome by selling pressure. We've so far to this morning we've had a significant bearish period. So we'll, as I say, we're looking for that to come back down to that level of about 1190. Okay, guys, as a short and brief today, many of you will be at the boot camp. And we also had the Trading Tuesday with more detailed analysis of what happened, or the effect of what happened in Brussels, that's already on the YouTube channel for last night. So that's it for today. We'll look forward to speaking to you again in the morning. Goodbye.